commodity, the pairs that affect gold, or the currencies that affect gold, the technical analysis of gold. Oh, that was a mistake. This is off. Technical analysis of 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 gold, and profiting with gold. So let's get started. Um there was a period I was teaching you guys about, I think this lasted for a month. Fundamental analysis. Then I taught you guys about safe haven assets. I taught you about antipodians, which is go sorry pounds, antipodians, pounds, the NZD dollar, that's the New Zealand dollar, the Australian dollar. Uh, then safe haven assets. I talked about gold. I talked about dollar, the Japanese yen. I talked about which other one, the Swiss franc. Okay, and then explained why those currencies are actually called safe haven. So I'm going to mention it briefly. Now, as the word actually denotes, safe haven. When something is safe haven asset is an asset that is uncorrelated or negatively correlated with another asset or portfolio in times of market stress or turmoil. Now, okay, let me finish reading it. Thus, a safe haven asset is expected to retain its value or even increase in value, or increase its value in times of market turbulence when most asset prices decline. Safe haven assets. Now, this is, let me just use layman terms. When you hear safe haven assets, these are assets, either be it commodity or currencies, that investors throw in their capital whenever there is turmoil in the market. And this is where you see, when those of you that actually do fundamental analysis, that you read the news, this is when you see the news talking about using terms like risk averse, risk off. Do you understand? When there is risk off in the market, which is also the same thing as risk averse. When there's risk averse in the market, there is a market shift. Okay, when risk off, investors are maybe there is a decline, especially in maybe antipodians, or maybe in pounds. When there is maybe a decline in all of those things, and in all of those currency pairs, the investors usually move their capital away from those currency pairs or those currencies, and then push them into safe haven assets, so as to reduce losses. All right, safe haven assets is like the saving grace. They save you when there is risk off in the market, when there's decline in maybe the prices of all of these other currencies or currency pairs. So, as the word safe haven, that is where you go to hide your head. Let me just use something that simple. That is where investors go to hide their head, dip their money in, okay, to secure their capital. The forex market is a $5 trillion market. So yes, there is a lot of liquidity in this. Is only sensible to have an alternative plan in case anything is going south in the market. And then, for those of you that we went deep into the fundamental analysis, I gave you a strategy on using the same sense these investors use. The way these guys move their capital away from currencies when there is a decline in the prices of these currencies. The same way these guys do these things is the same way you should also treat your equity, okay, regardless how small. These guys, this is what they do, and that's how they make billions. Why don't you just replicate what these guys do and make your own profits, be it no matter how little? All right. I talked about diversification of your portfolios and all of that. And you know what? Don't let me go too deeply into that. If you were not in that class, you can always send me a message on Telegram, and then I can find a way for you to watch or see the video, so you can learn from it. So gold as a safe haven asset. Like I said, gold is one of the safe haven assets. That is where investors dip in their capital when there is uncertainty in the market. So now let's talk about gold. I hope you guys understand everything that I'm teaching. So if you don't, please do ask me. Send me questions immediately so I can always note them down. If it is something I can explain, if it's something I can explain, yes, I explain immediately. If not, then I explain at the end of the class. Okay. So gold as a commodity. Reading what I have in front of me right here, gold is a unique commodity behaving like a monetary asset. All right. From the investment point of view, the inverse relationship of gold with the US dollar is practically the sole feature. Now, do you know what that means? Gold, the gold is XAUUSD, meaning it is paired against dollar. So you should know this. When usually when dollar is rising, what do you think will be happening to gold? Gold would definitely be falling. And if we have a weak dollar, you guys should notice this from the news that came on Friday. If we had a movement of to I think about 100 pips from gold in a bullish direction because dollar fell. All right, so the inverse, that is something you should always. I hope you guys are writing this down. Always note these things. Dollar has an inverse relationship with gold. So whenever dollar is rising, you should expect gold to be falling. So I don't want to hear it looks like uh gold will fall when you're seeing weaknesses in dollar. How exactly would gold fall when you're seeing weaknesses in dollar? So when dollar is getting weak, you expect what? You expect gold to rise. So these are simple fundamental features that you should know about. No one should tell you all this. You should just have all of this at the back of your head. Uh Now let me keep reading. The yellow metal is weakly correlated with other commodities like I earlier mentioned, except silver. Okay, it's less exposed to swings in business cycles. Typically exhibits lower volatility and tends to be significantly more robust at times of financial duress. I think I just explained that. Uh, in terms of financial instability, in terms of financial duress, gold remains strong. Things like that don't really affect gold. So yes, and that's one of the major features of gold as a safe haven asset. Okay. Also, gold source of demand are more diverse, which makes gold less volatile and less exposed to specific risk than other commodities. And then because gold is one of the densest elements, it is much easier to store than other commodities. And the simple truth is, what that is actually trying to explain is gold. The funny thing about gold is gold doesn't actually disappear. Gold, you when you use gold, you now in let me relate that to, let's say, food. Okay, or let me relate that to another strong commodity like oil or maybe coffee. Okay, when you use coffee, you've used coffee, it's gone. But when you make use of gold, gold is always available. And the simple idea there is the simple ideology behind that is the gold that was used even over 500 years ago, it's still actually somewhere right now. It's still in existence somewhere. All right. Gold gets recycled. And that's one of the reasons why gold will always retain its strong value. Even no matter how much you use gold, I mean real gold, no matter how much you use real gold, the value never diminishes, the value never dies. It doesn't really get used. Okay? So these are one of the major qualities or features of gold and why gold always retain its strength, and one of the reasons why gold is regarded as a safe haven asset. So now moving swiftly to pairs that affect gold. Okay, I'm a bit. It seems like I'm a bit fast in talking about all these things, but I need to be fast because I'd actually like us to take technical analysis. Okay, that's the major part. We like to take technical analysis of gold, and then um we can actually plan for gold for the coming week. Okay, which starts the market opens in about I think 4 hours. So yes, we look for opportunities in gold and then we'll see how we can profit from it. Okay, when the market opens. So I think I spoke about this earlier. I talked about dollar, pairs or currencies. I think I should have put that there. Current pairs or currencies that affect gold. Dollar, like I said earlier, dollar has an inverse relationship with gold. So when dollar is falling, gold should be rising. Okay. Another thing, another pair that really not really affects gold, but you should notice the correlation with gold. Pounds, the GBP USD, the same thing goes for pounds. Once I think I like you guys to notice this from Monday when pounds is falling, you would notice gold will be shooting up. Why? Because antipodians, like I said, a risk off. When there is risk off in the market, when there's uncertainty in the market, for example, the sharp decline of okay, you know what I like you guys to do? Go place a GBP USD charts side by side with a gold chart. All right, place them side by side and then see the difference in the movement. You will notice there's been a sharp decline in the price of pounds, and then there has been a sharp upward, like bullish movement in gold in the last few months. Okay, same thing, inversely related. Uh, whatever happens in the market and then pounds is falling, you would always notice gold will be shooting up. I think we saw that. Well, we've seen that in the past few weeks when pounds has been doing. I think pounds shot up and then and gold fell. Yeah, and then previously before then, pounds had been falling and then gold rising. All right. So oh sorry. Okay, the question that just came in, I think I answered that question after the class. So I hope you understand everything I'm saying. And same thing goes for Euro USD, but Euro USD is not a deep mover. Like I explained earlier, Euro USD is not a deep mover. So sometimes when Euro USD is falling, gold will probably be rising or falling. Their correlation is not, I can't say is negative, is positive. They are not really that correlated. Okay. I just needed to put it there so you know gold is not inversely or positively correlated with most of the pairs. It's just a few ones. The thing you should note is when you're reading fundamental news, okay, check for words like uh the risk averse tone in the market or risk on in the market. When there's risk on in the market, or investors take out their capital away from safe haven assets, which is gold, the yen, the Swiss franc, the dollar. They take away their capital from those safe haven assets and then dip them back into the market. Why? The risk on. Okay, maybe the investors have a reason to believe the pounds will continue to shoot up, or they have a reason that the Canadian dollar is about to grow, or something. There is a bullish momentum beaming up for any of these major pairs. Then there is a risk on in the market. They move their capital away from safe haven, and then they're about to take some risk. They want to make some more profits. But when there is a risk averse tone, when there is risk off in the market, investors usually put their money back into safe haven assets. I need you to have all of this at the back of your mind. So even though we're doing our technical analysis, we can have an idea of the way these people think, the way investors and then big traders think. And then once you start to think in that way, it helps you to make your decisions. You don't say because your RSI says, uh, your RSI is telling you that gold is going to fall. All right, but you're seeing risk on in the market, or you're seeing risk off in the market rather. Your RSI is telling you gold is about to fall, and you're seeing risk. Maybe you read the news in the morning, and then you're seeing there is risk off in the market. What do you expect? You expect gold to shoot up. There's risk off in the market. So even if your RSI is telling you, okay, gold is already in overbought, and you're seeing risk off in the market, what do? You don't sell gold. You stay away. Is either you buy or you stay away. All right? Simple as ABC. Simple as ABC. These are things that you need to know. These are things that you need to notice. So just have all of this at the back of your head. And then moving swiftly to go technical analysis. Okay. I do this. You know what? Let me take this. Then we go back to the technical analysis part. So like I mentioned earlier, there are two major ways to profit in gold, which is by investing in gold. When I mean by investing in gold, like the way you invest in stocks, like the way you buy unit share, you can also invest in gold. You can buy gold. There are ways by which you can invest in gold. And the other one is trading gold, which is what we currently do. We trade gold, and that's the reason why we're doing a tech analysis for it. So things that you need to note: always read the news, check the news for those of you that I gave you guys some links for how to check some news free. Uh, Usually premium news is quite expensive. It doesn't come cheap. Some go for as low as I think $250 per month. While a news terminal like Bloomberg charges you about $2,500 per month. I think about $25,000 per year. So yeah, it doesn't come cheap. But the beautiful thing, excuse me. But the beautiful thing about this thing is one thing you should always note is if news isn't a major part of this business that we do. If news information isn't a big part of trading, it wouldn't cost so much. All right, that's one thing you should always notice. If if news were just ordinary news, something you just need to know, not like it affects the majority of what happens in the market, in the forex market or the stocks market, why would a company be charging as high as $25,000 a month to provide you with analysis and news? All right. So even though you can't afford to be or to subscribe to those ones, but you should have an idea that yes, read news. Read news every morning. Is either you're checking the Bloomberg news. You can always go to their website, click on news, click on currency or forex. You can always use forex live for session wraps. You can always use what's the name of this other one? Bloomberg. You can use investing.com. What else? What else? Mm, excuse me. Sorry, excuse me. I think I mentioned it to you guys. I currently use Zero Edge, which is not free, but I trade like I always tell you guys, I trade full time. I trade forex full time. So I think it's only sensible for me to subscribe to one of the good ones. So take your time, grow. Use the ones that I gave you. I'm hoping somebody wrote that down. The Forex Live investing.com. Use Bloomberg, the website, the news. You can also use this, what do you call this one? The Net Dania. You can always download their app. You get some really good news from there, good analysis, and those things will actually help you in making a fixed decision. And now the reason I asked you to check all this news is to get informed. If I'm giving you a particular trade in the morning, and then the trades are in profit. When you are informed about the current situation in the market, you'll be able to know, should I stay in this trade? Should I close my profits or should I get out? Okay. This information will help you make informed decisions, and then you don't just jump out of a trade, and then by the time you come back into the trade, maybe an hour later, uh, maybe an hour later, you see, boom, the market has moved 100 pips in your favor, but you're already out of the market and you start beating yourself up. No, don't make decisions like that because it affects you. It will affect your psychology. This is something when I was teaching you guys the psychology of the market. I said the forex market is 90% psychology and only 10% skills. You need the skills to know what you're doing, but you need to be psychologically fit to trade the forex market because you make decisions every minute. All right. Uh, when I give you guys trades, it's not as if those trades you have one particular machine or particular system that says, okay, jump into gold now, or okay, let's jump into the Euro USD now. No, I use my personal conviction. I do analysis, I check, and I'm like, okay, this looks good for a buy. Let's jump into it. And then, like you guys have noticed, or like you guys can see, I am not 100% right. Nobody is 100% right in Forex. And that is why sometimes we take losses. But the beautiful thing is we take 90% profit and only 10% losses. All right? So nobody's 100% in Forex. You just have to find your own your strategy and then your timing. For example, this is what I mean by what I just said. For example, I trade majorly London session and then the beginning of New York session. Anything apart from that, I'm done for the day. Okay, and then we pick both day trades and swing trades. So I majorly focus on my day trades, close the profits, and then I leave the swing trades to grow. Okay, because the difference is in the lot sizes. I use a very small lot size for my swing trades and then a bigger lot size for my day trades. Okay, but remember the strategy that I taught you guys, the profiting strategy. You can always use that for swing trades and day trades. Now, this is what I mean by you can use it for swing trades. When you pick a swing trade and then the market start moving in your way, you can quickly jump in, but wait, confirm. You can quickly jump in, make a few pips, 20, 30 pips, boom, close it, and then let the remaining swing position open. Now, for amateurs, I keep saying this, for amateur traders, risk only 2 to 5% of your account. Okay, the more you grow in it, then you can increase the level of risk to maybe 5 to 10%. All right, trade smart. They remember the formula SP2: survive, protect, and profit. Survive the stormy movement in the market, protect your equity, then you can profit. Okay, be smart. You think smart, and then you trade smart. All right. So moving back to technical analysis of trade of go. Okay, you know what? Let me open my MT4. All right, good. So I'm sure everyone can see this. This is my trader, my MT4. This is the analysis that I have open, and I hope you guys do this also. When you do analysis, always try to do analysis of the major pairs or any pair that you want to trade. So this will teach you movement or guide you. This is gold. You guys can see all the analysis done here. You can see everything. So this guides you. Like for those of you that have been serious about taking the classes, which the classes that I mean the recorded webinars. We've talked a lot about trendline structures. We've talked a lot about MRAs, major resistance areas. We talked a lot about TDIs. Do you understand, guys? So this thing should guide you. Always have your technical analysis drawn out on your chart. So even when you're reading the news, this guides you. You can see the way the market is obeying all this technical analysis that I drew out here. Okay. I think I found something that I should draw out also. It's simple. It's actually not rocket science. Okay. It's not rocket science. You see, that's just it. Identify the major levels and then mark them out. So this is gold on a weekly. This is gold on a weekly time frame, and this is exactly what is happening. Like for you, I think I mentioned this about 10, 15 minutes ago. You can see the movement of gold. Can you see how bullish this has been from 2015? Yes, that's about 4 years ago. From let's say 3rd of May 2015, gold has simply been bullish. And then if you check, let me see if I can check pounds. Let me see pounds. Okay, this is Bitcoin. You see my Bitcoin analysis. You see pounds. Just to buttress the points that I gave you guys about the movements. You see from about 4 years ago, gold has actually been somehow bullish in its movement. Let's take a look at pounds. Okay. Sorry, I'm trying to zoom. Let me see. Oh, the other way around. Can you see? And this is from around February 2007. Okay, this is around the previous financial crisis. This is around the previous financial crisis. Can you see the sharp decline in pounds? Can you see? So you don't need it's not rocket science. You don't need a magician to tell you these little things. This you should just note these little things. You see how pounds has actually been declining, and see gold, and gold has been shooting up. Right? See, it shot up, came down, and boom, it's been shooting back up since then. I mean, gold got to a price of I think about 1545 or 1553. Yeah, gold shot up to a price of 1553 before correcting itself again, and then from what I'm showing you guys here, there's a probability of gold shooting back up. All right, I hope you guys can see what I'm saying. Can you see? You see the movement. This looks like a strong um trend line move, and this like forming a triangle right here. You see, forming this triangle. Let me draw it out so you can see. It doesn't have to be perfect. Just make sure you get what you're trying to do. Now this is different colors to analyze. Now do you see? Can you see the triangle? So this was actually a breakout. Let me zoom back in. You see, this was actually a breakout. So gold broke out, okay, boom, out, came back to retest, and this is on a larger time frame, and then boom, a bullish movement. So we expect gold to probably still shoot back up and then now make a correction, probably back to this line, back to this line, which is around this price, um 1367. We don't know when that will come. Right now we're dealing with a larger time frame. So what I'm saying could actually happen next year. Okay. These are things that you need to note. When you're doing analysis on a weekly or monthly time frame, you expect these things to pan out in months. Okay. Not in days or fast weeks. When you want to analyze the market that way, you should probably use the daily time frame or your H4, your 4 hour time frame. All right. So like I was saying, this is gold. This is one triangle here, which is the red lines. Then let's look deeply into the 4 hour time frame. Oh, sorry, I think I was in it the wrong way. Zoom out, zoom out. Okay. Now this is H4, the 4 hour time frame. You can see another triangle here, and then a breakout. So now this is what I expect from the market. I expect a bullish continuation. Okay, forming a multi-session M. You know what I mean by a multi-session M? This, okay. If you've been taking my classes, you would understand all of these things that I'm saying. I thought about, I think we thought about 1 month if, when we talked about M's and W's, the formation. Okay, then boom. Okay, now can you see the M formation now? If you want it to touch, let me make it touch. So do you understand? M, an M. All right. So even though our technical analysis is showing us that gold, there is a breakout, so gold should probably continue rising. Um, we have also have to please check the news. We'd also have to definitely, not just, we definitely have to check the news to be sure of what will happen in the market. So analyzing technical analysis in the market is as simple as this. I usually use the TDI. I'm not sure. I use, okay, I don't have the TDI installed on this. I have about four different MT4s because I use, like I told you guys, I have like different brokers that I use. So I have analysis done on each of them. And then the trading view, I think I should have done this analysis using my trading view. I have everything installed. If you don't use trading view, please use trading view to do analysis. It's easier. Then it comes with a lot of indicators and tools that you don't really have to install. They're already inbuilt. All you have to do is pick one up and use it. All right. All you have to do is pick one up and use. So, guys, technical analysis for gold is showing that for the next couple of weeks or for the next few days, gold should be bullish. Now, if you've been listening to everything I've been saying in the last 40 minutes, you should know that, or 45 minutes rather, you should know when you expect gold to be bullish. What do you expect for antipodians like the pounds? You expect it to fall. You expect probably the Euro USD to also fall because they are inversely correlated. All right. And it has just a simple, it has just a very simple explanation. When there is a risk off in the market, gold falls. When there is a risk on in the market, or when the risk off in the market rather, sorry, when there is a risk on in the market, gold falls. When there is risk off in the market, and then gold climbs. So I think when we start reading the news, when we check out the news from tomorrow, we'd know what's up. And then there is probability for pounds to fall. Okay, wait. I'm going to continue this thing that I'm saying after the class, guys. In case you get knocked out, please rejoin the class immediately. I think I'm having a little bit of network issue. So in case you get knocked out, you know what? I'm going to have to end it, and then please rejoin the class immediately. All right? Please rejoin the class immediately. Okay, good. All right. So like I was saying, the difference in the market when you have the risk off or the risk on. For example, we currently have the issues going on with Brexit, which is one of the reasons pounds has been falling in the past couple of years. And then from the update on Brexit, you would notice what do you call it? It was postponed. They were supposed to finalize Brexit by October 31st, but due to their parliament and decisions and all, they had to file for an extension to I think January. I think to the end of January, and I think they're actually preparing for a December 12th election. So that all of that would actually stop pounds from rising for now. So what do you expect in pounds? The bullish catalyst is now gone, and the hope of getting a deal, the hope of getting a deal before October 31st is the reason pounds had been surging up uh in the last few weeks. I mean, I said pad, sorry, pounds made a movement of over 500 or over 600 pips in just a couple of weeks. But now the push, the catalyst that is the reason for the bullish push is actually gone now. October 31st date expired, and then there was still no deal. Why? Because they filed for an extension till ending of January, and now we're expecting a December 12th election. So there is a probability for pounds to actually decline. Now that goes in line with what we just said. Do you understand how beautiful this thing works? And what we just said was we're expecting gold to continue to be bullish. Now, based on what I said earlier, when pounds falls, what happens to gold? Gold will be bullish. No, you see, can you see the simple ideology? Now, the funny thing is about the funny thing in this market is the way they all interconnect, the way they all work. I mean, technical analysis right here is showing us that gold is about to be bullish. Okay, we know from fundamental reasons that if pounds actually falls, gold will also still be bullish. And then you see the way the technical analysis is working hand in hand with fundamental analysis, as if everything is pre-planned, and it's not. It's just once you understand the market, okay, everything will continue to sink. You know this. Your analysis is telling you this and this will continue to sink. You get informed, and this helps you to make informed decision about the forex market. Okay, and that is the reason why I always say, knowledge is not power, guys. The use of knowledge is power. All right, the use of knowledge is power. Okay, so showing you all of this. I think this is that about this. If you know what, the assignment I'm going to give now is this is my analysis, this is my chart. I want you guys to do your own gold analysis on a daily time frame and send it to me. It shouldn't look exactly like mine. Hello. If you do your analysis right, there should be similarities, but it can't look exactly like mine. So if you do your analysis the right way, you will have similarities definitely. Okay. So the assignment there is to do your analysis and send it to me on Telegram. Send it to me privately on Telegram. Let me see how far you're going with your technical analysis, and because we need to record your growth. So guys, that's about that. Any questions so far? Questions. This is where we welcome questions. Questions. Any questions about gold? We've talked about the currencies that affect gold. We've talked about gold as a commodity. We've talked about gold as a safe haven asset. Why it is called a safe haven asset. We talked about how to profit, how to make money. Let me use that language. How to make money with gold, and then we've done the technical analysis of gold. Okay, you can see what you have on your screen right here. You can see what you have on your screen right here. It's the same thing as what I showed you on my MT4. I'm expecting a bullish movement from gold, and that is what I showed there. So now we're expecting either for gold to come and hit this particular resistance, which is the previous price of 1553, and either fall or breaks it and then continue shooting up. I think I have a question here. Um, okay. The question is it possible for pounds and gold to go up at the same time since it's not planned, like it just happened for some reason? Well, I think the right answer to that question would be yes. It is possible. It's the forex market. Anything is possible. But if that would happen, it will only happen as a flash. Okay, and what I mean by a flash is it's since it's not a natural, it's not a normal occurrence, it will probably happen and then correct itself immediately. For example, there could be a news release, maybe a particular economic data release that affects the market or turns the market upside down, and then you see all pairs move in the same direction. Yes, it happens sometimes. Yes, you're very right, it happens sometimes, but these occurrences are not usual. They don't happen all the time. So if it happens, yes, You probably, if you're in the market, you try to survive that market or profit from it. And if you're not in the market, you stay away from it till the market calms down. You should always wait for the market to settle whenever you have any form of unrest in the market. Okay, so yes, it happens. For example, earlier this year there was a market crash in which JPY crosses, JPY pairs actually moved about 400 pips each in about 7 minutes. Okay, a lot of people lost their account. A lot of hedge funds lost their equity. A lot of big hedge funds closed down. Why? Because the movement was crazy. It was unexpected. I mean, over 400 pips in 7 minutes. It was referred to as flash crash. You can always Google it. Google flash crash that happened. I think January 3rd this year. So yes, it is a possibility. So any more questions? Also, whilst I wait for other questions, this class has lasted for about an hour already. Okay, I think I have one more question here. Thanks. Oh, thank you too. So I'm glad you understand. I'm glad you understand what I was able to explain.